This is Mastering Real Estate with Master Sergeant Brian Wignall from the Wignall Group and the F.C. Tucker Company. On this show, we walk you through the process of home buying, maintenance, investing in real estate, and selling your home. Each week, we'll be joined by one of our platoon of local real estate experts to inform us about the various facets of the real estate industry.
Wake up, we gotta go. Wake up.
Hello and welcome to Mastering in Real Estate. This is your host, Master Sergeant Brian Wignall with the Wignall Group Real Estate and the F.C. Tucker Company. And I'm joined today by my co-host today. It's Andrew Franklin, one of the owners of Langdon Mortgage Company in Indianapolis.
Hi, Brian. Thanks for having me back.
Pleasure to have you here. Well, what we are going to cover today, something that we talked about on previous shows, but it's one of the things that I think is really important to discuss is basically the steps to home buying or the home buying process. But then a little later in the show, we're going to have Andrew talk about some of the new changes that we have that have kind of come about now that we're in the new year here, now that we're in 2023. So dealing with the home buying process, we've talked about some of this in the past. I think the first thing that your average buyer needs to do, sometimes people will look online and, try to get an idea of what's going on, and that's okay. But really the first step, I think, needs to be to find a good qualified agent and have somebody to kind of help you in the process. Makes things a lot quicker for you. And some of the things to look for in a new agent, in my opinion, would be, number one, somebody that's experienced. Experienced agents are worth their weight in gold. They can save you tens of thousands of dollars when you're buying and net you tens of thousands of dollars additional revenue when selling. But in addition, they know different things to make the transaction a lot easier. So somebody that's experienced, you want a full-time agent. We've talked about that before. You don't want somebody that's doing this as a side gig. You want somebody that this is their full-time job and their livelihood. Generally, buying or selling a home is one of the largest financial transactions that somebody will have. And so you want to make sure that the person that's guiding you in that process is experienced, and this is their full-time job. And you get experience by doing this full-time.
Brian, to interject, I have, between real estate and the mortgage business, over 30 years in the industry, and that is really key because someone that's experienced and is a full-time agent, if they've been doing things right, they're going to stick around. If they haven't, they're going to go. Out of the, I don't know what the current count is in Indianapolis area, but it's probably 7,000 or 8,000 real estate agents. There's really only maybe 1,000 that are full-time, devoted to their craft, and do it right. So you need to pick one of those people, not somebody that's a one-off that just does it as a part-time gig, because they're not keeping up with the industry.
Absolutely. And we see the on the internet or on local news, the home buying and home selling market is so hot. You have had so many people that have tried to get into that recently, and you have a lot of people with very little experience that get into this industry because they think it's a great way to make a living, and it really is. But you got to do this full time. This isn't like a flash in the pan thing where you jump in, and make $1 million your first year. That's not happening.
Right. It's not a quick buck type of deal.
Absolutely. And you definitely don't want to be the person either buying a house or selling a house, working with someone that's looking at this as a quick way to make a buck, because they might make your buck, but are they going to have the skill and experience to represent you to where you're taken care of?
Exactly.
The other thing that I always tell people as far as a trait to look for in a agent that you're working with, whether you're a buyer or a seller, is somebody that's responsive. And one of the reasons Andrew and I have been working together on transactions for quite a few years, and one of the things I really appreciate with Andrew is if I call him, almost always he answers the phone, and when he calls me, I answer the phone. We work in a very fast real estate market, and if you're calling somebody and having to leave a bunch of messages, or if you need to look at a house and the agent you're working with tells you, okay, cool, we can do that next Tuesday, probably not doing the best job representing you. If somebody calls me and wants to look at a house, normally my first question is, what are you doing in 30 minutes? That's how I try to run my business. I try to be uber responsive, and that's helped me be very successful in the real estate industry. And the last thing that I think is real important, in addition to responsiveness, is somebody that's very collaborative. There are different selling styles in just about any sales position you're looking at. And there are some people that are very adversarial. They just want to win at all costs. And then you have some people that are collaborative. And collaborative agents make all the difference in the world. If you're working with somebody that's collaborative, they're going to get along with other agents. They're going to be able to get things done. There are certain agents that if I have an offer that comes in on a house that I've listed and it's coming from certain agents, I love that. It's like, okay, I know her. She's great. She's easy to work with. This is going to be an easy transaction. In addition, there are other people where it's like pulling teeth. So having someone that's really collaborative, that's working in your best interest, but that wants it to be a win-win situation is really, really helpful, because honestly, real estate is relational. It really is.
It is. And it's not an us against them type of transaction. I think some agents lose sight of that. At the end of the day, everybody wants the same end result as getting the house sold and the new buyer moving in. And it's so much nicer when it's a relaxed, cooperative process. So it doesn't need to be viewed as a I win or they win. It's everybody can win in this game.
Absolutely. And at closing, nothing makes me happier than to see smiling faces on both the seller side and the buyer side. We want this to be a win-win. The person selling the house obviously wants to sell the house or they wouldn't have listed it. And so, it's in their benefit that this transaction is smooth and takes place. And in the same sense, the buyer is obviously interested or they wouldn't put in an offer. So I look at my job as being basically like a transaction coordinator with this deal, or a broker with this deal. I want to do everything within my power to help my buyer or my seller get the best deal that they can, buy at the best price that they can, or sell at the highest price they can. But I want to help them see it through to conclusion. I don't want this blowing up over silly stuff. And sometimes, honestly, agents bring their own stuff into the transaction. That's never helpful.
Right.
Now, what are these are kind of some of my criteria. What are some of the things that you've seen during your career as a mortgage broker and a lender that you like to see with real estate agents?
Well, I also think having a good working knowledge of the area is important, which you do. You take the time to go out and you literally jump in the car and show about every house. So you're familiar with really the whole greater Indianapolis area. I think that's also helped by the fact that you do a lot of business. Someone that only sells 1 or 2 homes a year doesn't get that working knowledge of what areas are coming up, what areas are going down in value, the latest developments that are going in, office buildings, whatever it may be, new schools. Mm-hmm. Those are all a product of your day-to-day experience in real estate. And so I don't think you need to pick an agent that's the biggest, but I think you want one that is busy enough to be heavily involved and know what's going on out there.
Absolutely. Absolutely. And I would say, conversely, I would look for the same thing in a lender. If my neighbor Bob just started as a lender, I probably wouldn't necessarily call him up. I like the fact that I'm working with lenders that are experienced, that know all of the products that are available to buyers. How long has Langdon been around now?
28 years.
Okay, so yeah, you've got a couple years experience there. So,
it's interesting. We were talking about in my office the other day about working with different realtors and forming that relationship. And I, at one point, had worked at a different company where a person who did more business than me, the most loans that he had gotten from one realtor in the course of a year was 3. And he did quite a bit more business than I did. I think if you're connecting with someone that looks at things the way that you do, you can build that relationship deeper rather than wider. And that's to everyone's benefit, the clients as well, because you and I work together quite a bit, and you know what you want. I know what you want me to do and how to relate to the client. You know that I'm going to call them back immediately, take good care of them. In fact, I haven't even told you this, but as you know, I do a yearly tally. And once again, you were my largest referral source. We worked together with 26 clients, totaling $7.18 million last year.
Very cool.
So thank you for that. But more importantly, I think that it's something that's benefited both sides.
Absolutely.
And that's what's nice to see.
Well, and I think the whole thing, you're bringing up a great point. Any industry that I'm working in, I really like to deal with people that are relational, not transactional.
Right.
If I'm going to buy a house, and if I wasn't an agent, I would want an agent that is relational, not just in it for the commission check. And the same thing with lenders, and that's been one of the reasons why I really appreciate working with Langdon and working with you specifically, because there's a relationship there, and I know that if I refer somebody to you, you're following up immediately, you're getting them pre-approved, you're doing all the things that you need to do as a lender. So
thank you.
Well, we are going to be taking a break here real quickly, but when we come back, we're going to continue on with the steps in the home buying process, and then we're going to cover a little bit on the changes for 2023. So we'll talk to you here in a few minutes. If you have any questions about real estate or anything regarding the real estate industry, please text them to 317-797-3580, and we'll feature those on a future show. Hello and welcome back to Mastering in Real Estate with your host, Master Sergeant Brian Wignall with the Wignall Group Real Estate and the FC Tucker Company. And I'm joined today by my co-host today, Andrew Franklin with Langdon Mortgage. And we were just getting to number 2. We're talking about the steps to home buying. And the first step, find a good agent. And if anybody needs one, I know a guy. And number 2 step would be find a lender. And I think that's just as important. And one of the reasons why I think it's important to find a lender is we need to do something called a pre-approval to find out what somebody's able to afford. Some people will come in and they're looking at a house at a certain level and they do a pre-approval and they find out, wow, I can go a lot higher than I was thinking. Or conversely, they could find out that their budget needs to be cut back a little bit. So Andrew is a great guy with that. I refer a lot of people to him. Why don't you talk to me about the pre-approval process? And if you could, there's some different terminology that we see used kind of interchangeably: pre-qualification, pre-approval, underwritten pre-approval, or automated underwritten pre-approval. Could you kind of talk to us about that?
Sure. Well, and first of all, I agree that it is a very important step to keep everyone from wasting their time. You don't want to go out driving people around, showing them homes that they either can't afford, or maybe they think that that's all they can afford, when really they would appreciate having something a little bit bigger.
Absolutely.
So it lets them dial in, and the market changes all the time. Prices go up. Sometimes they can fall. Rates can go up and down. So, when they talk to me, we can zero in on a monthly payment that they're comfortable with, and then make sure that lines up with what they can afford. In terms of the different terminology, you'll hear pre-qualification quite a bit. That's really more of an educated guess, I think, than anything else of what they think someone can afford. You're just talking to them, getting some information over the phone, and kind of calculating what you think that payment would be affordable, what payment would be affordable to them. What you really want is to, if you're in the home search, you want to get pre-approved. And that means the lender has taken the time to gather the information from you, verify income, verify assets, and run what's called, as you mentioned, automated underwriting. That's a tool that Fannie Mae and Freddie Mac use to give that upfront approval. As long as the information that you subsequently provide to the lender matches up with what was input, that loan will be approved. An underwriter will go through and verify that information. But as long as you've got the automated underwriting approval up front, you know it's going to work. So that's what we do pretty much in every case. Lately, I think most lenders, myself included, have gone to an easier process than a long phone call. We have online application tools. We send a link to the prospective borrower. They can fill it out at their convenience. They can upload income documents to that portal, and it'll pull credit, and then I just go through, verify everything, tune up the numbers, and run automated underwriting. As you know, I typically do that same day. Some people take a little bit longer, but time still is of the essence in this market. So when you have someone call me, I typically get it done. Like yesterday, I got it done within about an hour. I can typically work through it and have a pre-approval for you.
And that's great. And that responsiveness, I think, is just as important with mortgage brokers as it is with a real estate agent. And so that's one of the things I really appreciate about you is that responsiveness, because when somebody calls me up and they're wanting to start looking at houses, I want to start looking right away. And I also want to help guide them into an area that they can afford, take that back, not area, but a home that they can afford.
Sure.
As opposed to, showing someone $500,000 houses and then we find out that they're qualified for 200 or, conversely, we can go bigger than what they're anticipating.
Well, as you know, the market, while it has cooled off a little bit, is still strong.
Mm-hmm.
And you do still have competition among buyers for especially good properties. There's obviously a distinction that if a house is well maintained and kept up to date and priced competitively, they're still getting multiple offers.
Mm-hmm.
And you don't want to go into a situation like that without an approval in hand, because it'll be gone before they have the opportunity to submit an offer. And a seller on the other side won't take the time to even consider an offer that comes in without a pre-approval attached to it.
Absolutely. And one of the things I try to do, and I've found this to be kind of helpful when I'm submitting an offer, instead of just doing a blanket pre-approval. Bob was pre-approved for $350,000 on this day. One of the things I like with you and your company is you guys actually do a pre-approval. Bob was just pre-approved for 135 North Ruckle Avenue. And you're pretty specific. So that just kind of shows that the lender's looking at property taxes, HOA fees, all of that, and is pre-approving that specific property. That's helpful.
Yeah, if I had $1 for every time I'd send a text saying, "Okay, Brian, just send me the listing sheet."
Yep.
But you're exactly right, because a dollar amount really doesn't translate. We're not approving someone for a dollar amount. We're approving actually for a debt to income ratio. And as we talked about with a client last night, she was approved for a higher amount without it being a condo, because the condo association fee was $200 a month, which has to factor into that. And that cut her ability, the home purchase price, below where she wanted to be. But if it was not a condo, she could buy about $30,000 more home. So there's a lot of variables. Other times taxes, maybe the homestead's not in place or things like that. But you have to evaluate all those things, because it is a true debt to income number, not just a purchase price that we qualify for.
Now, how long is that pre-approval, that automated pre-approval, good for?
Well, credit reports are good, I think, for 90 days.
Okay.
There are other factors depending on if the borrower's self-employed. There's a number of things that can throw that off, but generally about 90 days.
Okay. And then I normally, even if someone's looking at buying a house 6 months from now, I still recommend getting a pre-approval, because isn't it easier for you once you've already done one to update it?
Oh, absolutely. It's almost a click of a button to update a pre-approval if things haven't changed significantly in their employment. So yeah, you definitely want to do it up front. We get some people that are concerned about having an additional credit pull down the road, but if they're monitoring it and they're in tune with who's pulling it, which they obviously are because they're concerned about it, having 2 credit pulls over the course of 6 months is nothing. It won't have any negative effect on them at all.
Perfect. Well, our next step after the finding a lender and getting that pre-approval done is, based on the information on that pre-approval, we start a property search. And with a property search, I normally will sit down and interview potential buyers and find out, okay, what size of house do you need? Are there specific areas you're looking for, school systems you're trying to stay within? Do you want a ranch? Do you need a ranch home, or do you want a 2-story? Do you have to have a basement? What about a fenced backyard? And I use that criteria to start sending out a list of available properties. And we send that out through the multiple listing service. In Indiana, that's referred to as BLC, which is Brokers Listing Cooperative. And unlike a lot of your external websites where it takes, anywhere from 2 to 5 days for a new listing, the information from a new listing to migrate onto those sites, if I have you signed up for the MLS or the BLC, you will receive a notification on any new properties that meet your criteria within 5 minutes of these things being listed. And one thing I try to do that's a little different than a lot of agents, I only schedule myself to work basically 4 hours per day. So I've got time and margin for showings, but I also always answer my phone. So if I'm doing lookups for you and a property hits and you get a notification at 9 p.m., text me. You'll be surprised at how quickly I'll arrange a showing for you. And part of getting a property at a good price in a nice area and being able to be the person who wins that whole bidding process is moving quick. We want to be the first person to look at it, the first person to put an offer in. We don't want a whole lot of competition driving the price up.
Well, and a good example of that was I actually referred someone to you last week, and she had been texting me about getting pre-approved and houses and what area she wanted to live in. And she sent a text, I like this house, and sent an address. And I pulled it up and it wasn't on the market. She had seen it on some other site and it had already pended. So you have to work with accurate information. So that's obviously I sent her immediately to you. And I think, getting instant accurate information is very important. The other thing I think that's really, at least in my case, I found when I bought a house through you was setting up a search with the right parameters really filters out all the distractions. You're not looking at houses that, and wondering, well, does this fit my criteria? Does it? Mm-hmm. You get rid of all the ones that are not on your hot list, and then you can really focus on narrowing down those top choices. It's not as overwhelming because when you're looking at 300 homes, you just can't separate one from the other. They all run together. But when you take the time to talk through area, square footage, number of bedrooms, all that stuff that someone is looking for, then you can send them just the relevant houses.
Absolutely. And the more that you receive listings and look through those listings, the more you'll kind of start knowing as a buyer, what are the things that are really important? I'd like to have a fenced backyard, but one of the questions I ask people is, if we found the dream home for you without a fenced backyard, would you buy it? Well, yeah, of course. Okay, well then let's take that off because you can add that fence. Right. How important is the basement to you? The more that we can do that, the more that we look at listings, the more that we look at houses in person with showings, helps people kind of define what they're really looking for. And so that's my job, is to help you narrow down your search so that you're not continually looking at 300 listings and zoning out, like you said, looking at all these listings. So next step, basically, after we start the search, once we find properties that look interesting, it would be scheduling showings. And essentially a showing is just going with an agent and looking at a house. And what we do with that is we'll kind of walk through the house. You can get an idea on space. It's hard to look at listings and completely understand the floor plan. You can walk in the house. Will my couch fit in this living room? Look at that type stuff. Are there any odors with the house? Where does it face? What do the neighbors' houses look like? There's some unknowns that you're not going to know until you actually look at it in person.
Brian, do you think that it's better to look at one house and then maybe another day another house, or schedule 4 or 5 showings back to back so that you can compare those houses as you go through them?
Great question. I normally try to limit it to about 6 houses per client per day. And the reason that I do that is if you look at more than 6 houses, they all kind of blend together. Mm-hmm. So if I had someone that wanted to look at 12 houses and instead of trying to get it out and do that in one day, I'd do that in 2 or 3 days. And the other thing I recommend, I print up listing sheets so people can kind of take notes and they can put their comments on there, because if you're looking at a whole bunch of houses, you're not going to remember the first house you looked at. So taking copious notes and me asking about, what'd you think of that is helpful information, as we go on. Well, it looks like it's time for another break. So we will be back here in a few minutes to continue on with our conversation on steps to home buying. If you have any questions about real estate or anything regarding the real estate industry, please text them to 317-797-3580, and we'll feature those on a future show. And welcome back to Mastering in Real Estate. I'm your host, Master Sergeant Brian Wignall with the Wignall Group Real Estate and the FC Tucker Company. And my guest today is Andrew Franklin with Langdon Mortgage in Indianapolis. Well, when we finished up before the last break, we were just going over looking at houses. Basically is step 5 of the steps to buy a home. Once we find a house that you're interested in, the next step is putting together an offer. Now, the paperwork and everything done to put in an offer takes me about an hour and a half to prepare, and it can all be filled out electronically online. And one of the things that a good agent's going to do with you is do what's called CMA, or a comparable market analysis of the area that you're looking at, so they can kind of help guide you on what would be a reasonable offer for this house. What is an offer we can put in that will enable us to not lose this house to somebody else, but in the same sense, not overpay, because that's never good. So once we have consensus, I'm told by my clients what they're wanting to offer. We put all that together on a purchase agreement, and we submit it to the home seller. Now, when the home seller receives that offer, they've got the ability to do one of three things. They can accept the offer, at which point we're in contract. They can decline the offer. If they have another offer that's better, they can just say no, or they can counter. For instance, if we're putting an offer on a house that's listed at $300,000 and we offer $295,000, they can come back and say nope, $299,000. Once we come into consensus with the offer that we're putting in, and they accept it, then we're officially in contract.
I'm going to back up just for a moment, if you don't mind.
Yeah.
Along with that, of course, the lender, if they're doing their job right, will put together, as you said, a letter specific to that property and have it in your hands before you've put everything together so that you can send it all to the listing agent.
Absolutely.
In one email.
One packet, yeah.
The other thing that we'll talk a little bit more about this, but especially in this market with higher rates, it's great when your lender and your real estate agent are in communication, because there's times when up front on that offer, you want certain things put into the offer in terms of seller concessions.
Mm-hmm.
And we'll get a little bit more into that with a topic about buy downs, but that's something that has to be addressed up front. So it's always good when you go in with a real estate agent that has a good working relationship with your lender.
Absolutely. That's critically important. And like I said a little bit earlier, having that customized pre-approval letter, I think, grants so much credibility in the buying process. And that's part of the packet that would be submitted to the listing agent to go to that seller. So instead of a generic, Bob's approved for $300,000, we're going to have a letter saying Bob's approved for this house.
Yeah.
We've looked at everything.
And it's funny, I get calls, from listing agents saying, I can't believe you put that together at 4:00 on a Sunday afternoon. And, you just learn to have systems in place that enable you to do that. I hate to admit it, but there's times I've sent off pre-approval letters from my boat because I've got it on my phone.
Yep.
And but I think it's worth the time for me to take to do that whenever it needs to be done, because they want to see their address on that pre-approval letter.
Absolutely. Well, once these people get that pre-approval letter, they get that purchase agreement, and we are in contract, the very next step is for you to pay down earnest money. Now, what earnest money is it's basically like money guaranteeing the transaction. Kind of like if you're buying a car or a truck and you tell the guy, hey, I've got to get a bank loan tomorrow, but here's $100 to hold it for you. That's kind of what we're doing in the home buying process. Only traditionally in Indianapolis market, the amount that you put down on earnest money is going to be 1% of the purchase price of the house, no less than $1,000. Now, that earnest money goes towards whatever percentage your lender is going to require you put down on the house, which is great. And when it is given to the buyer's agent or put into escrow, that earnest money cannot be touched by the buyer or seller at that time. It's basically kept in an account until closing, and then that will be a closing proceed. That'll be something that gets paid to the seller at closing and counts towards the buyer's expense, or pardon me, the buyer's what would you say?
Down payment and required funds for closing costs and other things.
Okay, so that's basically the purpose of earnest money. Now, like I said, earnest money is generally going to be 1% of the purchase price of the house, but that goes towards your 3% or 3.5% or 5% or whatever your requirement is with your lender. What is the required amount down now for like FHA and conventional currently?
Well, it depends on the program. There's USDA, which is a zero down. That program has geographic restrictions, so it's limited to more rural areas. VA is zero down, and then you go to FHA, requires 3.5%, and then conventional now has a 3% down option. It used to be 5% was the minimum, but there is a 3% down program. However, there are some restrictions in terms of income, and it's geared towards first-time buyers, and there's an education class that goes along with that. But for a first-time buyer that makes less than I think it's 80% of the average income of that particular county, which in Hamilton County, for example, I think they can make up to about $90,000.
Wow.
So it's fairly open. That's a great program because they can put down 3%. As a first-time buyer, typically that's the biggest hurdle is getting enough money put together to put down on a house. They also allow gift funds with that program as well. So again, varies by program, but generally, excluding the zero down programs, 3 or 3.5% is the minimum amount required.
Perfect. And those gift funds can come in handy too if you have a parent or a relative. How can the gift funds kind of come from any source, or does it need to be a direct relative?
Depends on the program. VA actually is very open in where it can come from. Most conventional programs require that the gift come from a relative.
Okay, great. Well, once we basically put that earnest money down, that property goes into what's called pending status. So if anyone's ever looked at properties online and they see pend, P-E-N-D, that means that house is under contract. So even if somebody came along and offered $100,000 more for that house, that seller cannot sell it to anybody else as long as they are in contract with that buyer. The next step after a house pens is going to be the inspection. Now, Matt Lawtis with Pillar to Post has been on multiple shows with us, and he kind of talked about the whole home inspection process. But essentially, that's where we have an inspector go in, inspect the house thoroughly. Your average home inspection is going to be about 3 hours long. And anything we find in there, we're going to kind of review. We're looking for major defects. And if we find some stuff, we've got the ability to go back as a buyer, and me as a buyer agent, we've got the ability to go back to that seller and say, okay, we're gonna buy that house at $297,000, but we want you to fix the leaky roof, the leaky pipe in the kitchen, the rocking toilet, and the bad thermal seal in the window on the northern exposure of the house. Now, when we do that, once again, that's a negotiation. That seller's got the ability to do one of three things. They can say, yes, we'll do it all, and then we move on in the transaction. They can say, nope, we're not doing a single thing, and then we need to decide, do we want the house if they're not fixing this stuff? Or they can counter. We'll fix the leaky roof, we'll fix the leaky faucet, but we're not fixing the bad window with the thermal seal, and we're not tightening down that toilet.
I think, thinking through it, one would say, okay, well, I'm going to wait to start the financing process until I know that these things are going to work out. But generally, the way the contracts are structured and the time that's allowed to close, you have to start with your loan up front. And that's kind of simultaneous in terms of timing with the inspection. And so one quick thing to point out, there's a lot of lenders out there that charge a $500 application fee, and it's non-refundable. We don't do that. I think it's important to look at a lender that doesn't hold you hostage and doesn't take your money if the deal falls apart because of a bad inspection. So my thought on it is I only want people doing loans with me that want to work with me. Mm-hmm. And I'm not going to hold anybody hostage, especially for $500. It's just not the right thing to do. So I would look at a lender that doesn't charge an application fee.
Absolutely.
And that way you don't have to worry about getting started immediately with the loan, even though you don't know the outcome of the inspection.
Absolutely. Well, and especially people are already going to be paying for an inspection. Your average inspection can be anywhere from, $450 up. So they're already paying for that. So not having to be locked down to that $500 until we find out, is this house a great house? Is this something that you want that's going to be a blessing to you and your family? Or are you getting ready to buy something with termite infestation and foundation damage?
Right.
So yeah, great point. So basically, once we get past that inspection process and there's consensus there, most of what you as a buyer are going to be doing from that point forward is going to be with you and your lender. So you're going to be doing all the paperwork required. I can have Andrew talk about some of the stuff that you're going to need to provide. And then we're going to also have to do an appraisal. Now, an appraisal is not necessarily a legitimate valuation of the property, but it is a person's opinion on what they value that at. And all they're looking at doing is valuing it at least to the amount of the loan that you're taking out. So you could have a $500,000 house that you're buying for $150,000, and we just need to make sure an appraiser appraises that at 105, or 155, whatever. They're not going to value it to the full potential, but that's an opinion. So, and the appraisers are hired by the lenders. So why don't you talk a little bit about appraisal pool? We're gonna cover that as soon as we get back, but it looks like it's time for another commercial break. So we will see you back in a couple minutes here.
Sounds good.
If you have any questions about real estate or anything regarding the real estate industry, please text them to 317-797-3580, and we'll feature those on a future show. Hello and welcome back to Mastering in Real Estate with your host, Master Sergeant Brian Wignall with the Wignall Group Real Estate and the FC Tucker Company. And I'm joined today by my guest, Andrew Franklin with Langdon Mortgage. Now, we have been talking today about the steps of the home buying process. And the step that we just ended on was basically working with the lender, getting all the paperwork together that they need, getting the property appraised to determine value for the purpose of the bank. And then the very last step, once we get to that point, is basically the closing, which takes roughly an hour. It's going to be done at a title company. Once that's done, you get your keys. Congratulations, you're a homeowner. But Andrew, why don't you fill in a little bit before we get into some of the changes for 2023? What are some of the things you're looking for as far as paperwork in between that period of time where everything's pended and where we get to that clear to close?
Well, it depends on the situation for the borrower, if they're self-employed or if they're a W-2 employee. But the nice thing is, if we've done our job and done the pre-approval up front, like we've discussed, those automated underwriting findings actually tell me what we need. So I can let that borrower know as soon as their offer is accepted what they need to send to me or upload, and have that, and then get it into underwriting. So it's turned around quickly. The last thing that you want is to have loan drama going on heading into the closing. You want to coast into closing without that hanging over your head. Mm-hmm. So we try to get the loans clear to close well before that actual closing date. Then we can work with the title company, work up the final numbers so the borrower knows how much they need to take with them to closing, and everybody's prepared.
Perfect. And one of the things I will add, dealing with that whole appraisal process, is using a local lender. A lot of times we're able to see local appraisers appraise those properties and get a lot more accurate valuation. I have dealt with some e-lenders before that will hire an appraiser out of an area outside of the subject area where the house is. Hire an appraiser from, Martinsville or Anderson to appraise a house in Carmel, and really for the appraiser to get a good idea of valuation, it's helpful if they're from the area also and they know that area.
Well, most of the lenders have to use what's called an appraisal management company, and that randomly assigns the appraisal order, and you can get someone that doesn't have a working knowledge of the area or that market. We're pretty fortunate, and the more I do this, the more I realize it's somewhat rare. We've been approved to have our own appraisal management company in-house. So I have a pool of appraisers that I've hand-selected, 5-6 people, depending on any given time of the year. And I know they do a good job. They've all been in business for a long time. And I know when I get an appraisal, if it comes in low, there's a reason. And I don't look at it and find mistakes that the appraiser made. I realize they're helping me keep my client from overpaying for a house. But I also know that they know the market well, and they take the time to look for the value, to support the value of a home, because that's what it commanded on the open market. So it's really a neat tool that we have, having our own appraisers in-house to be able to do that. We've had far fewer issues with appraisals than what I hear other companies having.
Absolutely. Now, we wanted to, before we end our show today, Andrew, one of the reasons I had you on the show, why don't you talk about some of the changes that we've got now, some of the new landscape for 2023?
Yeah, it's going to be an interesting year. Obviously, 2022 was pretty dramatic in terms of where we started the year and where we ended the year in terms of rates. They've gone up quite a bit. House values also climbed considerably. So every year they look at the value of houses out there and adjust the maximum conforming loan limit accordingly. And so because of that, in 2022, the conforming loan limit was $548,250. That's the max you can borrow before you get into a jumbo loan. In 2023, that's going up to $647,200. So about $100,000 increase, which opens the door to people. Conforming loans compared to jumbo typically have better rates. It's an easier underwriting process typically. So that is going to let people borrow more money to keep up with the market that's going up. So that's one of the big changes. FHA follows that. They usually set their limit at 65% of the conforming loan limit. So FHA is going from 356, 362 up to 420, $680 for their limit. VA is a little bit of a different animal. If you have your full entitlement, there's not a limit on VA. Now, different investors will cap it. Like one of my investors says the max that they will do is $4 million for VA. But
Wow.
generally, it's open. Now, if you don't have your full entitlement, it's kind of it's more of a complicated formula that's the lesser of 25% of the requested loan amount or 25% of the max conventional loan limit minus any unrestored entitlement. You need to talk with your lender about that. It gets a little, it's not something that's easy to figure out on your own. But if you have full entitlement, meaning that you've not had a VA loan go bad or something like that, then it's wide open. Another change with VA, because I know with you, we like to do VA loans. We love to, I think some people see them, just a quick side note, some people see VA loans as something they don't want to take on as a seller. And nothing could be further from the reality. It really always burns me when a different offer will get accepted over a VA loan offer that's comparable. VA loans close more reliably than any other loan out there. And they also perform better. So, and why wouldn't we want to help our veterans, right?
Absolutely.
So VA has made some changes where you can do now one borrower on the loan can have no score. Or if there's two borrowers on the loan, if you manually underwrite it, neither of them need to have a score. So that's kind of neat.
Wait a minute. Let me get this straight. So you could have somebody so it can't be a low score. It can just be a zero score?
Yes.
So you're not loaning to someone with a 500 credit score, but if they don't have any credit score
Any
because they
score.
don't borrow anything, they could still get approved for a house.
That's correct. There are those rare people
Wow.
out there that have never established credit. The other thing is relating to lower scores. Most of the investors have lowered what we call an overlay. VA doesn't have a minimum credit score, but most investors have an overlay where they say this is the minimum score that we'll do. And most of the investors out there had been at 640. And over the course of the last year, we've seen that drop to 600. So that opens the door to more veterans as well to get a VA loan.
That's awesome.
Let's see, some other things. We talked briefly about the 3% down conventional product. It's not new, but it's something that I think that some people aren't aware of. It's through Fannie Mae and Freddie Mac, and they're called Home Ready and Home Possible. Again, geared towards first-time buyers, 3% down payment. It has reduced PMI, which is nice. Gift funds are allowed.
Now, real quick, definition of PMI. PMI stands for...
Private mortgage insurance.
Great.
And when someone puts down less than 20%, there's always PMI required. And you pay more PMI the less that you put down. However, this 3% down program actually has a slightly reduced PMI rate compared to other programs. On a normal conventional loan, you have a certain amount of PMI you'd pay at 5%. Then it drops once you get to 10% down. Then it drops again at 15% down. And it goes away altogether with a 20% down payment. So that's Home Ready and Home Possible. Not new to the market, but evolving through the course of last year and into this year. Loans for self-employed borrowers, bank statement loans. You couldn't do those at all for a while after 2008, and they've come back where if you have a self-employed borrower that doesn't show on their tax returns much in the way of income, but has cash flow, they will analyze a year or in another investor's program, 2 years of bank statements and qualify them based on the amount of money being put into the bank account that's from business deposits and qualify them that way. So, and then I think jump to the real important one I want to touch on is buy downs. Mm-hmm. So with the rates being really high, payments have become of concern to people. There's an option, and this is where the realtor has to be prepared up front and work with the lender. You can do a 1.0 or a 2.10 buy down where let's say the rate's 7%. On a 2.10 buy down, the borrower would pay 5% the first year, 6% the second year, and then go to 7% from that time on. And that's a great thing because we'll probably be refinancing them in the course of the next year or two. And so what that would do, I calculated it on a $300,000 loan or $300,000 purchase price. They would save the first year $366 a month.
Wow.
The second year, $187. It would cost $6,642 to do that buy down. And what you would do is you would ask for that as a seller concession on the purchase agreement, and then it goes into an escrow account. And the beauty of this is if they refinance the house, say after a year, the money that's sitting in that escrow account that wasn't used to cover the reduced payment goes to pay down the principal of the loan when it's refinanced. Wow. So it comes back to help them. It's a great program. I recommend, if anybody has questions about it, reaching out to you or to me for more of an explanation on it.
Absolutely. And if you need to call me for any reason, my number is 317-797-3580. And Andrew, why don't you give the listeners your phone number?
My number is 317-627-2290. And you can reach me at andrew@langdonmortgage.com as well.
And one of the reasons that 2-1 buy down is so critically important is the likelihood of interest rates dropping in the next 2 years is about as close to a sure thing as you can get to. Interest rates are a little bit higher than they have been over the past few years for sure. So having someone be able to get in at that lower payment might enable them to qualify for that house. And then when the rates drop, just refinance.
Absolutely.
Marry the house, date the rate.
Exactly.
Well, listen, it's been a pleasure basically having you guys listen in to us today. On behalf of myself, Master Sergeant Brian Wignall with our Wignall Group Real Estate and FC Tucker, and my guest, Andrew Franklin, I wish everybody a happy new year and happy house hunting.